Hello, everyone. This is Barbara and Rosaline coming in today on Friday on our Financial Friday podcast. We are hoping that everyone is doing the best that they possibly can. We know that this is unprecedented times, time to reset and renew. And for us personally and for business people, we are really going through a lot. The only thing that I could pretty much say is that we've gotten this far. And, I know we've all made some adjustments, some really hard adjustments to keep ourselves going. So that gives us an indication that we can make this through. If you're preparing yourself for these changes and you're making these changes, whether they're good or bad, or whether you feel like they're not fair, at least we're here. And we're here today to try to keep you encouraged, keep you moving forward, to help you not become complacent and frustrated, trying to encourage you to think outside the box. Don't become fearful, or about failing or losing, because you're not going to fail if you keep on running this race. And so we're just here to encourage you guys today. We know the business owners are going through a whole lot. This whole COVID-19 is affecting us all in ways that we've never imagined, even myself in my business personally. I've got to come up with different ways to survive and keep it going. It's not easy, but I'm still here. I'm not going to give up. I'm not going to give in. And I hope that I can encourage you, and we can encourage you today to keep going. The government did come up with another round of funding for businesses. So hopefully it will get into the hands of the ones who've been sitting back waiting. The big ones, the big companies have gotten their money and left us high and dry. So hopefully the second round will get into your hands to help your business maintain and thrive and keep moving forward. So it's our hope that we're going to be able to tap into the second round of financing on the payment protection program for small businesses to keep going until we can come through this thing. So I'm going to just kind of move on to Rosaline and she's come up with some more information to help businesses, and just let you guys just tune in and share with your friends and family. And today we're really encouraging you to ask questions or share with us, maybe what you're going through. We really want some feedback because we're here for you, and we want to be able to help in any way that we can. If you have any questions, please send it in right now on the live feed so that we can discuss your questions while we're here. Okay, go ahead, Rosaline.
Yes. I realize and I understand why that there has been a lot of attention geared towards the EIDL loans, the EIDL advances, and the PPP, the payroll protection program, because everyone's out there, they want to do the best that they can to save their businesses and kind of keep things going while we're going through this unfortunate period. Is something that I just couldn't imagine that I'd live to experience, but here we are, right?
Yeah.
But what I wanted to do today was kind of give some more information of some other things that business owners can do to take advantage of what's available to them through the CARES Act. So like I said, while most of the attention has been on loans, there are two things that I like and that I've been using in the last couple of weeks with clients that's also part of the CARES Act. And I wanted to take some time and I wanted to share that today. The first part of the CARES Act that allows a tax break, and the ones that I'm talking about today are basically all geared around tax breaks. So the first one is the CARES Act allows you to postpone payroll taxes. So the CARES Act allows eligible businesses to delay its share of the Social Security tax that would normally come along with your payroll. And usually it's pulled quarterly, and then again, at the end of the year. But because of everything that's going, it allows you to be able to delay paying the employer portion of Social Security for 2 years. So the way that it will work is whatever your Social Security is for the entire year, let's use a number of 12,000. Let's just say you paid employer Social Security tax of 12,000, then they will split it up in two payments. So half of that, which would be 6,000 in this example, would be due at the end of 2021, and the other half would be due at the end of 2022. So that's just another example of ways that you can save money during the whole Corona COVID-19 period if you're an employer. I know a lot of
So with
employers
that, you're
have.
saying that basically if you do take advantage of this because you're not due that payment, to redirect that money right now with what you could use it for now, is that how it's thought of to be?
Yeah, well, it's definitely, it's just another strategy on how you can cut down on expenses,
Okay,
basically. It really has no relation to the COVID-19 experience other than it's allowed now in the CARES Act. Normally, your Social Security employer payment is due at the end of each quarter
yeah,
with the taxes for your employees that you take for them.
right.
But this portion of the CARE Act, I believe is Section 2302, allows you to defer paying your Social Security, the employer portion, not the employee portion,
Not
the
the
employer
employee,
portion
yes.
over the next 2 years.
I see.
Now, if you, and I always would advise, I came on earlier a couple of weeks ago, and I encouraged anyone who can to still pay their bills. If you can afford not to do this, I would suggest that. But the way that things are rolling out, and there's no definite plan as to when they're going to start opening up businesses and opening up the country, and rightfully speaking, everyone needs to be protected. If that's the case, and you find yourself, I need to figure out a way to still keep my staff going or my business going, what could I do? That is an option to postpone the Social Security employer portion of your payroll tax. Okay.
Right. Mm-hmm.
And another one that I absolutely am in heaven with right now is the whole opportunity to be able to win at net operating losses. Now, net operating losses are basically what happens when you basically spend in a particular year more than you've earned. So that's how you will result in a net operating loss. And a lot of times it happens with businesses in their first year. You always hear that. It's been almost like a staple. Oh, expect to have a loss within the first year. And those of you who haven't, kudos to you, But usually when you start small business, usually in the first year you do experience some loss, and even in the second year, and then sometimes you go up, you go back down. So it can happen over the course of running a business. So what happened is that the Tax Cut and Jobs Act of 2017 kind of took away that whole experience of being able to use your net operating losses to carry them back. So you were only, so because of the Tax Cut and Jobs Act, you were only able to carry your losses forward, and you were only able to use deductions that were 100%, only 80%. So as a result of the CARES Act, the CARE Act temporarily eases that whole NOL, which is net operating loss, changes. So I'm just going to share my screen a little bit so that you could kind of get a visual of what actually happens when you use the NOLs. So let me try to do that now with everybody. Let's see. I have quite a few things going up here. Okay, can everyone see that? So assume that a business has been in operation since 2017, and in 2017 and tax year 2018, it had a net income of 100,000 and a net income of 150,000. And it had a tax rate, let's just say, of 25% on net income. A surprise, let's just say something happened in 2019 and they experienced a net operating loss that particular year. That's what you would see here. So what, oh, I'm sorry. So what ends up happening is that when you're here, you have a cumulative difference of $25,000. I said 25%. So now what happens is filing for NOL will allow you to generate an immediate savings of $56,000, because now you can take this $225,000 loss that you incurred in 2019 and apply it to the net income in 2017, and you can apply the rest of that 225 to the revenue that you earned in 2018, and then you can generate an immediate tax savings of $56,250. So the CARES Act permits net operating losses now for tax year 2018, 2019, and 2020. So you can take those, and it goes back up to 5 years. That's something to remember. So if you have a net operating loss, let's just say the last tax return you filed was 2018, you can go all the way back to 2013 and apply this net operating loss to any revenue or that you have earned earlier in the last 5 years.
So that's pretty generous.
It is pretty generous, and definitely a reliever for clients who have owed. So basically how it works, let me just kind of go a little intricate with it, is let's say you had this $225,000 loss, right? So what it does, it actually takes this loss and make it a deduction. So let's just say in these past years, you had a deduction of maybe only 100,000. So now you can use this, let's say this 225,000, and add that to your deduction. And what can possibly happen is you can possibly have a refund and have a credit for that year. So I really love this. It's really dope. It will definitely help a lot of business owners who have found themselves owing taxes in the last 5 years. And they can definitely use it basically to clear tax bills that they're currently having.
Yes.
And now they can get some peace of mind knowing that they now can carry some of these losses back.
Right.
You know?
Yeah.
So it's good. It's definitely
very good. Very good.
If you have a C Corp, carrying back the net operating loss will particularly be useful, as a corporate rate prior to 2018 was 35%, as opposed to the 21% resulting from the Tax Cut and Jobs Act starting in 2018. So I really, really love this part of it. it's almost as rewarding as being able to get money from the government that you don't have to pay back,
Right.
if used properly. So I just wanted to take the time to educate business owners on some other ways that the CARES Act can actually come in play and help your businesses. In
Yes.
addition
Yes.
to the EDIL loans, the EDIL advances, and the PPP.
Right. So this is done when they do file that they're carrying over and being able to pull this money forward, right? The
Yeah,
loss.
well, they've already, most everybody, yes. So everyone has already filed. Hopefully, you've
Yeah.
already filed your taxes for the last 5 years prior to that. So all you'd have to do is you'd have to file two forms depending on how you're structured. Okay, so individuals, trust, estates will prepare Form 1045 in the year of the loss. Um, and what I'd like everybody to do, if that's of interest of you, I'd like you to email me, rgordon@thegfs.com, and then I can help provide the forms for you and some of the information. Now, pass-through entities such as S corporations, partnerships, will pass their losses through to the individual tax return. Everyone who's in that type of business knows that that's how that will work.
Okay.
Um, it will pass through to the shareholders' tax return, and recipients of those K1s will file for the NOLs on their K1. So that's how they will work. Okay.
Okay.
So one of the great things, and I'm not sure how this is working out because I know that the IRS is also practicing social distancing and a lot of government offices are closed down. But as of last Friday, April 17th, until further notice, the IRS will accept eligible refund claims, Form 1139 and Form 1045, submitted via fax.
Okay. That's good.
I want you to write this number down and I will put it in the notes to 844-249-6236. That's 844-249-6236. And that's if you're submitting Form 1139. Now, if you're submitting refund claims on Form 1045, the number to fax is 844-249-6237. Okay, so this is all open up now for you as of Friday, April 17th. Go ahead, if you haven't spoken to your accountant about net operating losses and what the CARES Act means for you, I encourage you to do it today. Get them going, and get you some of this money back, get you some credits. Okay.
Wow, Rosaline, this is great stuff. And if their accountant didn't mention it to them now, this might be a good time to switch accountants to Rosaline.
Hey.
So she's digging deep and she's sharing some really good information of things that you may not have been told. So that's what we're here for, to give you some up-to-date good information that can keep you thriving and keeping you going. And this is definitely something that I was not aware of. So kudos to Rosaline. Thank you so much for that. Okay. Did any questions come in?
Let's see. I have something from my accountant friend, Sabrina Wood. She also added that Form 7200 to claim an advance payment of the refundable tax credit for qualified retention wages. So that's another form that you could submit in this whole CARES Act business here for you if you have for qualified retention wages. Yeah, so that's one of the things I'm seeing here. A lot of people are just, like kudos and just considering that there's a lot of money that's out there.
It is. That's about 5 years back. Yeah, definitely. And the first year in business for startups, I'm a witness. You're going to I did spend more money just getting ramped up.
Oh yeah. So have your accountants look that up. Get them on there, get them working. you
Yes,
know,
definitely.
get
And
them working.
definitely reach out to Rosaline if your accountant is not familiar with these things. She's on the ball with it, Rosaline. Kudos to you. Absolutely.
Thank you.
Okay. Yeah. So there's no other questions. Then I guess we can wrap up for today. Just encourage everybody to keep it going. Just keep it going. For you personally, your expenses, try to squeeze those expenses, those regular bills that you have, and those things, kind of bring them down to size where you can manage them until things start to turn around for you. Um, and use your money wisely, spend your money wisely. Don't go running out there to the stores because they say, here's your $1,200, let's go spend it. Still stay safe, keep yourself protected. Don't let that be the enemy sending you out there so that you can get sick. If you don't really need to get out there, and you should maybe reconsider if this is money you want to spend on frivolous things right now. So we just want to encourage you to stay safe, and protected, protect your family, from obtaining this terrible virus, and be encouraged that there are signs that maybe it might be getting a little bit better, that there's help for the businesses coming again so that they can stay in business possibly. And for those that are sitting back, I always encourage you to come up with some ideas that you can make some money and bring some money in for yourself. And I'm going to be sharing some things with folks that have done that, who've dug deep and came up with ways that they can draw in some more money and some other forms of revenue and income for themselves during this period of time and beyond.
Yes, definitely.
Yeah. All right, guys. So
Okay.
we're hoping that you have a safe week. We're making it. We're going to keep on making it through, and we're going to still look at this fabulous information that Rosaline has presented today. We're still going to come back with more and more information to keep you encouraged, keep you educated and informed so we can all make it through. Okay?
Yes, definitely, definitely. And like I said, if you have any questions or concerns, feel free to email me at rgordon, rgordon, at theggfs.com. And I will be sure to get right back to you. I also have an Excel spreadsheet that I'd like to share with everyone if you're not really sure what should be included on your PPP application, just to make sure that you really get the maximum amount that you deserve. Okay?
Right. Yes.
So we'll talk to you soon and see you here next week for hashtag Financial Friday.
Yes, indeed. Thanks, everyone. Stay safe.